Holy moly, Batman! Rental prices are down in Miami-Dade and Broward County. Robin, you dumbass. If you had been subscribed to Jake Fletcher's YouTube channel, you would have known this was gonna happen. What's up, everybody? Today, we're gonna be talking about rental prices going down in Miami-Dade and Broward County. And, I'm pretty excited about it. Seems like people enjoyed the last rental update, so maybe it's something that I'll incorporate into the channel more here. Let me know in the comments down below if that's something you guys would like. But Jake Fletcher here with the Fletcher Group at eXp Realty, and I'm your Miami real estate agent here to give you guys the data straight from the MLS so that you can make the most informed decision for you and your family. And like I mentioned, really like Robin mentioned, we're gonna be talking about how rental prices have gone down. We're looking at supply, we're looking at new listings, we're looking at the rate of rental transactions. So we're gonna take a little bit of a deep dive into each of the two counties. And, without any further ado, let's deep dive into the data. All right, let's jump into this graph here, this first one. And if it's your first time on my channel, welcome. Little side note, over 90% of people who watch my channel aren't subscribed. So please consider, doing that. These videos are free. So I don't know, the way I see it, the least you could do is hit subscribe. Helps me out a ton, costs you $0. So let's talk about this data here. So we're looking at first median sale price and the number of sales, which AKA that is actually rental transactions. So ignore the word sales and just pretend like it says rental, closed rentals. So basically in Miami-Dade, median rental price is down $100 to $3,100 per month as of this point in December 2022. So that'll be the first decrease in median rental price since February of 2022, as you can see here on the green line. And since then, prices have stagnated all year long up until this point. So, it might only be $100, but considering all year prices have been stagnant, I would say that's pretty significant, okay? So next up, let's talk about rental transactions. Again, ignore the word sales. These are closed rental transactions. Even though I pay $1,000 a month, $1,000 a year for the MLS, as do all the other realtors, we get this like 1990s style MLS, that looks like MS-DOS or something like that, like you would see in your local library in 1998. But anyways, I digress. So closed rental transactions should clock in around 2,720, so 2,720 units with a daily average of around 90 rentals closed per day, okay? So if we extrapolate that out, as we like to do, then that's actually in line with what we would expect, with a slight decrease from November to December being pretty much normal, okay? It's the winter holiday slowdown, less people, it's just not as appealing to move during that time, okay? So next graph I wanted to show you all here is this one. So that's a fun looking graph, right? As for the number of active rental listings, which is what we have here, versus the number of new listings, okay? So active rental listings is basically another way to say supply, and then new listings are, the new listings coming on the market. And as you can see, the green line, hits rock bottom, which that's our number of active listings, that's our supply. So it hit rock bottom in the second half of 2021, as you can see here, with under 4,000 units of supply. And now we're at about double that, about 8,000 units of supply. Still have a little bit of a ways to catch up to where we were pre-pandemic, but things are looking better than they were, throughout the last year. So that's cool. And really, the last year and a half or so. Check out from January 2022 through October of 2022 right here, where supply basically just went straight up, super drastic increase in supply. And as we saw on the last graph with rental transactions, they went down drastically, while on this graph, we see supply and new listings were both low, okay? So sales were low and supply and new listings were low. So people were really apparently hunkering down in their current units, all while median rent increased drastically up to above $3,000 a month. Usually when there's less demand, you see prices go down. But similar to the purchase and sale market, because the inventory was so historically low, we actually saw those prices go up, Okay, so, and supply is still historically low, so we don't expect to see big rent slashes, but do keep in mind, like I've said in other videos previous to this, the deals aren't in the listed price, they're in the sale price, meaning the price that a unit is ultimately rented for, okay? So, that's pretty interesting there. Let's look at the blue line. The rate of new listings has been increasing since the beginning of 2022, as you can see here. So far in December, we have 2,843 new listings as of filming this video on December 22nd. So from that, we can project out that we'll probably have around 4,000 new listings by the end of the month, which would be about 180 less than the month prior. But that would be a 53.5% increase year over year from December 2021. So that's definitely a good sign for normalization in the rental market. So right now you might be saying to yourself, what about Broward? Jake, you said you were going to talk about Broward, all right? Calm down, hold your horses, all right? Broward median rental prices, as we're going to see on this next graph, shaga-jaga-ga-boom, right here, boom, are sitting at $2,800 a month. So a little cheaper than Miami by $300, which, hey, $300 is $300. That's like your healthcare for the month, or something like that. So same as November. Basically we're at $2,800, but down $100 from the peak of $2,900 in September. So it's a similar to trend as far as what we had going on in Miami-Dade, and we love to see things get more affordable, so that's pretty cool. As for closed rental transactions, let's look at this next little graphity graph right here. Boom. So as for, oops, I'm sorry, that was on the last graph. I'm skipping ahead. I'm ahead of myself, all right? So as for closed rental transactions, we should see the final number around 1,800 closed rentals, which would actually be an increase of over 100 closed units from the month before, okay? So that's kind of somewhat bucking the trend of the, holiday slowdown that we usually see, okay? Now let's go to the next graph here. Catching up to my own brain. Whoa. And as for Broward supply and new listings, it's a pretty similar trend to Miami-Dade, which is pretty much expected, because they're so close to each other. There's a decent bit of overlap in terms of what's going on in the rental markets at any given time. The only difference is Broward has less units for rent overall. So as you can see, the rock bottom period for Broward was under 2,000 units right here in the green line there. As far as the active supply. Remember, Miami-Dade was 4,000, right? And now in Broward, we're sitting at about 5,000 units of active inventory. So, we're not really too far off from historical patterns, pre-pandemic, that were closer to around the 6,000 range right here, okay? Now, talking about new units, new listings in Broward, those have also increased since the beginning of 2022. And based on the numbers that we have in December so far, we can pretty much expect that we'll have around 2,590 units for sale by the end of the month, which again is lower than the previous month, but much higher than last December by 53.7%. So similar increase in inventory year over year as we saw in Miami-Dade. And again, that's good news, okay? And honestly, the Broward real estate market's looking a little bit more normalized and healthy than the Miami market, I would say, simply because Broward's a bit closer to being back to normal levels of supply and new listings than in Miami-Dade. So, these are all really important context clues, information, data that you should know. So what does all this mean? What's the context behind this all? Well, first and foremost, if you are a renter, I highly, highly recommend working with a rental agent or working with a realtor who can help you with rentals because, number one, it's free for you. As a renter, it costs you $0.00. So you might as well work with a realtor who can run the comparable transactions, the comparable sales, right? Remember, sales or rental transactions, and see what the actual market value of a unit is, okay? That's going to, number one, it's going to save you money potentially because, remember, like I said earlier in this video and I've said on other videos, videos, the deals right now are not in the list price. The deals are in the closed price, okay? And what that means is that, you can't blame landlords for wanting to try and get the market peak still, even though we're not at the market peak as far as rental prices. They're going to try to still get that price. Some of them might, but I don't begrudge them. I don't blame them for trying to get that price. But the reality is there is a market value to anything that's listed for sale or for rent on the market. And, that market value is, it is what it is. It's based on what the comparable closed transactions were, not what the landlord feels that it should be worth, okay? Now, if you're working with a realtor, they can help you find what that price is, and then you can offer that price. And, there's a lot less competition than there was pre-pandemic. And honestly, even like right after the pandemic in Miami-Dade, especially, demand went crazy because there was, everybody and their grandma and their uncle's cousin's parakeet was moving to Miami at that time. So, there's a lot less competition right now, and you can use that to your advantage, okay? Now, what does this mean if you're a landlord or an investor who's looking to become a landlord? Well, again, definitely work with a realtor because they're going to be able to help you price that property properly, okay? They're also going to be able to help you, with processes to vet the potential tenants. They're going to help you with showings, marketing the property correctly, and all that stuff. So much more that goes into it, which we can talk about at great length if you want to schedule a free consultation with me in the description down below. I got my Calendly link there, all my contact information, but I digress. I'll give you an example, okay? So if your unit, let's say your unit is actually, the market value is actually $1,900 a month, but you list it for $2,000, okay? Because you think, hey, I can get $2,000. But let's say that it actually sits on the market for an extra month because it was overpriced. Well, for $2,000 a month, you were hoping to make $24,000 in a year, but you actually ended up making $22,000 a year because it took you a whole extra month to get it rented at $2,000. Versus if you listed it at the market value of $1,900 and you got it rented out like pretty much right away, then you would have ended up making $22,800 in that year versus $22,000. So you made $800 more by pricing it less simply because it didn't have to sit on the market as long. And I see this literally every day. I'm looking at whether it's a purchase, like a property that's listed for sale, or a rental. I see things that are overpriced and they're sitting on the market for a long time. You don't have to believe me. If you go on any of the third-party, real estate sites, you'll start to see that, properties are sitting on the market way longer than they were last year or the year before, when we were like in the peak of craziness. Now, another thing that I would like to point out for you if you're a landlord is, you're not just going to be able to endlessly increase rent. As we can see from the last year, prices stagnated, okay? So be conscious of the fact that if you're buying an investment property with the idea of, oh man, rents have gone through the roof, that means when I, turn this over and I rent it out, rents are going to be like $50,000 a month or something, being hyperbolic, of course, but like, just be conscious that rents don't only go up. As we saw over the last year, they went stagnant. And if you had bought at the beginning of that year, hoping that, hey, when this tenant moves out in a few months, I'm going to be able to increase the rent drastically, you might not have been able to do that if it was already, around market value. So just keep that in mind, that rents don't go up infinitely, and you really need to know what the market value of something is. I know in other markets, I've heard from other realtors and other investors that I know around the country that rents are actually decreasing, and they're like, man, I'm trying to do everything I can to hold on to my tenants, okay? So, if you do have a good tenant as well, sometimes it's worth taking a little bit less, per month, so you don't have to turn the unit over, because that incurs the turnover cost of, making everything all spiffy and jiffy again. And you might have, a full month of a vacant property, which really eats into that bottom line. So those are my thoughts, guys. I'd love to hear what you guys think in the comments down below. What do you think is going to happen with the rental market? What are you seeing on the ground if you're in the process of looking for a rental? And of course, I'm always here to help you guys out. So if there's anything I can do, all my contact is in the description down below if you guys want to reach out, whether you need my help now or you just want to discuss for the future. part of what I love about my job is I get to help people come up with a game plan. And then, a year, 2, even sometimes 3 years later, we actually are able to, enact that plan. As long as they've followed what the steps were of the plan, that's just such a fulfilling thing. So I love it, guys. I love you guys for watching. Thank you so much. And, happy holidays. Hope everybody is safe and enjoying time with your family. And I'll see you guys on the next video. Peace.